Let's cut across to the TCS management. They've started addressing the press after their
terms on a Y-on-Y basis. At 8.5% dollar growth, our growth acceleration on a quarterly basis continues. The quarter has also been marked by strong operating margin growth, which has expanded 17% on a year-on-year basis. And going on to the net margin also, at 8,100 plus crores, this has been a very steady net margin performance, with net margin expanding more than 21% and coming in at 21.5%, 21.4% for the full year. That's from the profitability metrics perspective. From cash generation also, it has been a very strong year. Our total cash generated from operations this quarter is more than 8,000 crores, with free cash flows of more than $1 billion, and our cash conversion rate at slightly more than 98%, in range with our long-term averages. When you look at it from segment perspective, one of the most important things is that our large segments like North America continuously inch towards the company average and the double-digit trajectory that we have set for all our businesses. North America registered 9.9% growth on a year-on-year basis. If you look at UK, this is a standout performance. Our long-award approach that macro is just the environment that we work in, but we are more focused on opportunities at a customer level and making investments and making sure that we utilize those opportunities and fully participate in that is best showcased in the performance that we are seeing in UK. UK grew 21.3% year on year, and I'll share the full year numbers also. So we are very happy with our performance in the UK market. And on to Continental Europe. Continental Europe has been steadily growing, and it continues its above average growth, registering a growth of 17.5%. Similarly, from a segmental results perspective, BFSI had a milestone quarter, breaking into double-digit year-on-year growth, registering 11.6% year-on-year growth for this quarter. And we'll come to the full year numbers also on that later. Life Sciences, as has been in the last few years, steadily continues to grow at a very accelerated pace, registering more than 18% growth. And Retail and CPG also continues its double-digit trajectory, and the recovery in this vertical is also quite heartening. From a large customer perspective, we have added more than 6 new customers in the 100 million plus bracket, and our digital revenues now constitute more than 30%, at 31% of our revenue, growing at 46% year on year for the quarter gone by. Overall, headcount addition has been very strong. We added more than 29,000 people on a full year, rather on a year-on-year basis, and our attrition continues to remain very an industry benchmark, with industry-leading retention rates and an attrition rate of 11.3%. Looking at the numbers from a full year perspective, we have delivered $20.9 billion of revenue for the year gone by, at 146,000 crores, which is a growth of 11.4% in CC terms and 9.6% in dollar terms. Rupee revenue growth came in at 19%. Even more heartening, our operating margin expanded 79 basis points for the full year and came in at 25.6%. And our net margin remained steady at 21.5%, growing at 23.8% year on year, and delivering a 40 basis point improvement at the net profit level. So overall, very heartening set of numbers. Cash conversion is also very strong at more than 100%. And if you look at the segmental results, they in many ways mirror what I spoke to you in the Q4 results itself. North America, as I said, steadily continues to march towards its double-digit trajectory. For the full year, North America has delivered 8.3%, which is more than double of what it had done in the previous year. UK, I already spoke about the focus on customers, focus on opportunities, resulting in a full year revenue growth in the UK market of 22%, which is something that is really a standout performance. Continental Europe, once again, as I mentioned, it's been a steady performance there, market leading in company leading growth, and we are very happy with the work that is going on in both UK and Europe. BFSI, compared to where we were at the same time last year, we are in a much stronger position. And once again, to emphasize, these numbers are excluding the fantastic work that's happening on our BFSI platforms. This is our BFSI services revenue, which has clocked in 7.7% for the full year. Energy and utilities, life sciences, healthcare, all of these are registering close to 20%, 15% plus kind of growth rates. Our client additions continue strongly. Our digital revenues are for the full year growing at more than 50% at close to 28.6%. So overall, as I mentioned, this has been a picture perfect year. And when we think back about the year, what I'm most happy about is this is a year where TCS has fired on all cylinders. All elements of our strategy, all dimensions of our strategy, all elements of our organization have worked together and delivered as a team to deliver this, to generate this kind of outstanding results. Starting with our Business 4.0 framework, which is our thought leadership framework that's allowing us to participate in the growth and transformation agenda of our customers. Going on to areas like MFDM, the Machine First Delivery Model, our investments in ETNOW, which has had an outstanding year, doubling its customer base to more than 100 with more than 50 go-live customers. Our focus on Agile and our location-independent Agile is as transformative to this industry as the global network delivery model that we introduced a couple of decades back. So every element of it, if you think about digital, we have now created more than a $6 billion business that is growing at close to 50%. And what's most heartening about it is that it is a reaffirmation of the belief that each TCSer has in herself and himself to transform from within and to be able to constantly invest in ourselves to capture the ever-changing opportunities in the technology world. Similarly, if you look at our investments in areas like R&D, we now have been granted more than 940 patents, and we have filed close to 5,000 patents. So our investments are bearing fruit. Our platform business, which delivered outstanding deal wins, continues to be a pride, and again is built on organically invested assets that we have systematically built over decades and have been able to exploit into to generate market-leading opportunities. So overall, if you look at from employee perspective, again, as I said about digital, what is outstanding is the fact that TCSers have been able to come together and harvest the contextual knowledge that they have and been able to really drive the digital champions champion status that we are seeking. And we have been able to do this in the core with people with whom we have invested in on a continuous basis. That shows through in our employee retention, it shows through in our customer satisfaction, it shows through in our industry-leading growth. We are also constantly changing the talent landscape. The work that we are doing with HR and along with our ION platform in what we call the TCS National Qualifying Test, the TNQT, and our online training program, which we call TCS Explore, will fundamentally change the talent landscape in India. We are using our scale and we are putting it to the greater good of the country. We now have active engagement with students from over 1,800 campuses. So this is a true platform opportunity where scale is actually delivering larger good and also allowing us to deliver on our own strategic initiatives. I could keep going on and on. I'm very happy about where we are, and I want to thank all our customers, all our employees, and all of you who have had faith and confidence in us. And with that, I want to, before I open this for questions, I want to share one more important update. 39 years ago, a sprightly young man joined TCS, among the first 500 or so to join TCS. And today marks his last quarter in this phenomenal journey. Ajayda will be retiring at the end of this quarter, and I want all of us to join together and wishing him for best of luck and thanking him. He has seen everything in TCS. So any questions you have, you can today direct at Ajay. With that, thank you, everyone.
Thank you, sir. We'll now begin with the Q&A. The first question is from Sajit Mangat, Bloomberg Quint.
Rajesh, good evening. Congratulations on achieving $20 billion mark. It seems every 5 years you're doubling your revenues. Okay, my first question to you is with respect to the growth which you have clocked in FY19. 11.4% on CC terms and 9.6% in dollar term growth on a year-to-year basis. How sustainable is this 11% growth for you? The second one which I have is with respect to order, because your commentary spoke about that the order book is now more than 3 quarters, bigger than the 3 quarters. Can you give us a color of the order book? How big is it and from which region is it coming in? And the third one is on your capital allocation policy. Is there a change in that policy, or have you increased the capital outgo to the shareholders in the next or coming financial year? For Ramki,
Okay, fine, go ahead.
oh, I can take it one by one.
Okay, let me address the TCV part of it. So in this quarter, we have closed total contract value of more than $6.2 billion. And most interestingly, this has actually come from many markets. So it has come from Europe, it has come from UK, India, Middle East, from verticals, different verticals it has come across. So it has been a very broad-based one, not just lumped together in North America or BFSI. So that's one of the big things that gives us the confidence about the momentum that we see. I don't want to comment on the specific number, but if you look at where we were at the same time last year, we had very large segments that were actually dragging on growth. We were growing at less than 2-3% and had large segments. We also had the benefit of a few large deals. Now we have a much more even portfolio where almost all the segments are close to the company average, so that we don't have any specific laggards per se to talk about, any large segments that are laggards. So that sets us up nicely into the new year. We are exiting this year or entering next year with a 3.6% growth locked in because of the Q4 performance that we have. And this compares to something like 2.5% for last year. So we have a percentage point lead on that side also, about 80 basis points lead. So net, it's in a good position. We have runs on the board. We have a great team. And we are looking forward to play.
The 11.4% growth.
Question.
Then I'll ask all the question in one go then.
No. So we have to restrict ourselves to one question.
So the 3 questions which I asked, one was on the TCV, the second one was on the kind of growth that you had for full year in dollar terms. Are you confident of double-digit growth going forward? And
Sajid, I answered the growth in as much detail as I can.
Okay. Yeah. And the capital allocation policy, is there any changes to that?
At this point of time, there is nothing. So we've always maintained that close to 80 to 100% of our free cash flow we will return. So if there is a change, we will come back.
Okay, Sajid, we'll have to come back to you.
26 to 28% was something which you had guided last financial year. We ended the year at less than 26%. Are you still continuing with that kind of guidance, and what are the levers that you have to push through in FY20?
I think we have said that this is not a guidance, but it's more an aspiration. This is our own target, which we look at. If you look at the full year, we closed at around 25.6, and which is about 80 basis points, 79 basis points increase over the last year. So despite all various things which have been happening, so from a margin perspective, we are somewhere close to the lower end of where we want to be. But again, it's not a guidance.
Yeah. Thank you, Sajid. Next question is from Reema from CNBC.
Congratulations, gentlemen, and a joy you will be sorely missed every single quarter from here on. It's been a pleasure interacting with you over so many quarters.
Thank you.
I just want to first talk about his TCV number, $6.2 billion of deal win. How does it compare with, say, FY18? Higher or lower by what percentage point? On margins, Ramki, do you think in the coming year you will be able to maintain these margins on a full year basis, or will they be under pressure on account of supply side issues? And you've spoken about the cost of business going up in the prior quarter. What is the position on that? And finally, also a word on BFSI and GS, if you could add. You've hit that double-digit mark in Q4. Will it sustain, or do you think macro uncertainties could cloud that outlook?
Okay, mine is the easiest one. We have started declaring these numbers only for this financial year, so we don't have comparatives for next year. You'll have to wait for the coming year to get a year-on-year comparative.
But at least directionally, would it be higher or lower?
Wait for the year, then we'll tell you year-on-year. Ramki?
Yeah, I think on margins, we stay quite focused on this one. I think all the levers which have been working, they continue to be strong. And if you look at various other parameters and metric, so that is there. So there is no reason why we should not be confident about continuing to be resilient on our margins.
And on the cost of doing business?
See, for instance, last quarter, yes, a little bit on the some of the people costs, etc., went up. But if you look at it this quarter, our gross margin has been steady. And also on SG&A, there's a slight increase in the expenses. But if you look at it on a year-on-year basis, it is almost on the same range. And as I said to the earlier question, on a full-year basis, our margins have expanded by 80 basis points. So we'll continue to be on that journey.
And this is one-off, right? Because of some electoral bonds.
Yeah, that's part of our expenses. Yeah.
And on BFSI?
See, banking financial services, we have been growing consistently over the last 4 quarters, and we're exiting this quarter at a year-on-year growth of 11+%. So we've set ourselves well, and we're participating in greater number of opportunities. Overall, we don't see any sectorally, there is any weaknesses, though there are some softness with some clients in North America, some clients in Europe. But we don't see any sectoral weakness per se in banking, financial services or insurance.
Thank you, Reema. Our next question is from Swati from Z Business.
Hello, hi. Gentlemen, congratulations. Numbers are obviously better than what the street was estimating. Of course, a bit of margin decline, which was again expected. But a specific question about the markets that you were talking. While we are talking of an era, and last time when we were talking of geopolitical tensions and other global risks, how comfortable are you now, having seen what has happened, and there could be some play spilling over in the coming quarters? So how are you, factoring in when you talk about the numbers and the prospects of growth? Number one. Number two, on attrition, of course, you said the benchmark standards, addition of people as well, you talked about. What is the forecast looking now for the next year? Is it going to be as healthy as you had projected, or it will be pretty flat going forward?
First one.
Yeah, thank you. I think Rajesh alluded to this in his opening commentary. There are always these macro issues and macro challenges like Brexit and a few others are there. But we are pretty focused on looking at the market, looking at what our clients are investing in, and create opportunities and then create offerings to tap those opportunities. Right? For example, UK this year has grown by nearly 22% year on year. So in a situation where always UK was seen as Brexit, right? So we have grown at 22% in that. So it shows that, look, we are very focused on markets, focused on opportunities, focused on our clients, and see how do we create offerings. And this year, during the year, more than 25 plus offerings have been created, integrating some of the digital core, some of the digital on the front, and how do you stitch together solutions overall that will enable us to capture those opportunities. I think overall, while we don't want to discount the macro situations, economic situations or micro outlooks, whatever you want to say, that's for economists to worry about. But for us, I think we'll worry about what clients are saying, what opportunities that they are investing in, where they want to grow, and see how we want to position ourselves to participate in those opportunities.
Attrition?
For attrition side, I think, see, overall what we have is about 11.3% in the IT space, and is the benchmark as far as industry is concerned. And we have been maintaining it pretty flat at that range. So people are generally pretty happy, and the kind of investments that we are making in our own people in terms of, as we said, that digital is the way to go. So the entire training and whatever is going on, the opportunities that people are getting, that's definitely helping in retaining the kind of talent base that we have and building their competencies. Rajesh alluded to the contextual knowledge, the agile way of working and everything else. And as far as your question of growth is concerned next year, so that is something that probably I should not say and put my successor in trouble. But jokes apart, I think we have not been giving you the numbers that we will be hiring in future. It depends upon the business growth. And at this point in time, if you see, we are pretty confident and we will be hiring. And the only numbers that we point out is the number of trainees that we have given offer to. And this year we have done the TCS National Qualifier Test, 1800 colleges, from where it was online test, people came in, campus testing, and we have given about 30,000 offers to the campus hires. They will come in and join in the next financial year. So beyond that, any other numbers will depend upon the growth. We are doing all just-in-time kind of hiring, and we are going to meet all the business requirements, that much. Yeah.
Yeah. Thanks, Swati. Next question is from Pranay and ETNOW.
Congratulations on solid execution. First up, you said it's been a picture perfect FY19. So how do you picture FY20 given this kind of strong exit and the solid wins that you have and the robust pipeline that you mentioned? Any challenges FY20 and on board? How do you picture FY20?
We'll carefully tread on it and paint a picture which we can be proud of next year.
But I'm asking you this, that are you as confident about the year as you were about midway through FY19 when it came to growth momentum? And we are seeing it come across geographies and segments. That is what I'm asking.
Pranay, without again being led into saying something that we don't want to, as I said, we are exiting this year in a much stronger position than what we entered the FY19 in. That's the reality. There is everything else you guys actually know more than we do. Our intention is to stay focused on our strategy and to participate fully and to look for opportunities and grow. Beyond that, it's very difficult for us to actually make a comment, but we are confident we are out there.
And on margins, these are sustainable margins even for the year ahead? I mean, Q1 you're going to absorb the higher wage costs and...
The most sustainable thing about margins is this question that keeps coming. So it's been the same question, our answers have been the same. It is our intent, it's our aspiration, and we continue to stay focused on it. At a point where we think that this is not possible, at that time we'll call it out.
Yeah.
Environment where subcontracting costs have been higher and there is talk that Ruby perhaps can strengthen. So last year it was depreciating 8.5%, that was a big tailwind. So we saw the benefit on your margins as well year on year. That's why I was asking when that environment is...
The rupee is a critical component of it because as we have always maintained, our cost structures are linked to local inflation, and the inflation differential is economically reset by the depreciation of the weaker currency where the inflation is higher. So that is part and parcel of our business model, and any short-term movement in that volatility will come through, but structurally we are in a good position.
Thank you, Pranay. We'll have to come back to you. We'll come back to you. Next question is from Neha Tyagi, BTVI.
Good evening, gentlemen. Going back to the margins, this quarter, if you look at year on year, 31 basis point is the contraction that you've seen. Can you talk to us about where this contraction is coming in from? Is it because it is a seasonally weak quarter, or is there any specific reason?
I think given that this is a year end, a better way to look at it is for the full year. Last year we did 24.8%. This year we are closing at 25.6%. We have good momentum, and we will see where it goes. There are multiple positives as well as multiple challenges that you guys have laid out. We think that we should be able to get it back in and keep it somewhere in that range that you have spoken about, and that's our intent, and we'll be working towards that.
So your digital revenue is growing in a very healthy manner. Can you talk to us about some of the biggest projects or strategy that you're currently working on?
No specific projects to call out on, but more and more digital is becoming very core to the overall growth and transformation that customers are seeing. We have spoken about areas like wealth management, where a combination of automation and digital transformation at the front end is fundamentally reshaping this industry. Retail has been at the forefront of what is going on. Customers are completely reimagining the way organizations are structured, going into what is called as moving from a product-centric organization to a customer-centric organization, and combining digital and agile and going into product-centric ways of thinking about their delivery methodology. So it is now becoming very fundamental to everything that is going on, and that is where the volumes are coming and the size and the acceleration is coming from.
So just lastly, firstly, your partnership with Google Clouds, what is the kind of opportunities, the synergies that you're looking at? Also an update on the US discrimination suit.
On the cloud side, we continue to participate with all the major providers. Our positioning is actually as a client-centric organization, which enables a customer's heterogeneous hybrid cloud strategy and provides the customers an ability to maintain their strategy beyond a single on a technology and a vendor agnostic basis.